Hello everyone, welcome to my YouTube channel. In this video, we are going to talk about Waaree Energies Limited. We will see what is their business, how they have performed in Q2 of FY26, and towards the end, we will see whether this is an investable business or not. I will run you through the PPT of Q2 FY26, what the company has provided. Let me share my screen. All right, I hope you are able to see the screen. So Waaree Energies is basically into the manufacturing of solar cells and solar modules. Now this is the backbone of solar industry. So with the help of solar cells, solar modules can be manufactured. So solar cells are the basic unit with the help of which solar modules can be manufactured, which is in turn used to generate electricity. The raw material used for manufacturing solar cell is polysilicon, which basically comes from China. So I think this level of information is sufficient to get started with. So this is the PPT which the company has provided while disclosing their Q2 FY26 results. So let us have a quick look at the performance what they have delivered in Q2 of FY26. The total income has gone up by 70% year on year. The EBITDA has gone up by 155% year on year. The EBITDA margin is at 25.2%. The PAT, that is profit after tax, has gone up by 134%, and the PAT margin is at 14.1%. So their current module capacity is 18.7 gigawatt. Their current manufacturing capacity is 5.4 gigawatt, and their current order book is 47,000 crores. Uh, they have a capex planned of 25,000 crores of like they plan to they plan to use this expenditure in a span of 2 to 3 years, wherein most of their expenditure is going to happen in the financial year of 27 and 28. Their ROCE is good; it is at 41.8%, and ROE is at 34.8%. So this slide talks about the production ramp up. In Q2 in the last financial year, the module manufacturing capacity was 1.9 gigawatt, and in Q2 of FY26 it has gone up to 2.6 gigawatt, which is a 37% increase. Their current cell production capacity is zero point 0.6 gigawatt. If we talk about the order book, their current order book is nearly 24 gigawatt, which translates to nearly 47,000 crores. Now, out of this entire order book, nearly 60% of the order is coming from the export market, and the remaining 40% is coming from India. They also have an order pipeline of 100 gigawatt. What it basically means is they are bidding a lot of different tenders. So we will have to wait and see how much of it will actually get converted, and how it will add to their order book. So talking about the revenue mix, if you look at their geographical revenue mix, so in this particular quarter, that is Q2 of FY26, so nearly 53% of their business has come from domestic market, and 47% of their business has come from exports. So this slide talks about the industry growth as a whole. So I will not talk in detail about this slide because I have already made a video on Waaree Renewables Technologies Private Waaree Renewables Technologies Limited. There I have explained what is the industry growth in detail. I have taken into consideration a lot of different aspects. So you can watch that video and you can get to know like what is the growth prospect for the solar industry in India. But if I have to tell you in short, the growth in solar industry in India is expected to grow at a CAGR of 21% from financial year 25 to financial year 30. So this is a very impressive growth. So you can pause this video and you can read through it. But before I move to the next slide, I would like to tell you one thing is that whichever stock that you invest in, you need to see what is the growth rate for that industry. If the growth rate for that industry is not good, then you'll not make money in that stock. Okay. So irrespective of whatever stock that you are picking, the fundamental thing is that the entire industry should be growing. Okay. So if you invest in a stock in an industry which is not growing, there are high chances that you will not make money. This is one. Second thing is that you will have to see the government policies should be favoring that industry. Okay. What I mean by that is the government should be making policies which are supporting that industry. So solar industry is one which is growing very fast. Now, what do I mean by a fast growing industry? Okay, so we will have to see what is the growth rate of India. So we all know that India is growing on an year on year basis at 6% growth rate. Okay, so any industry that you decide to invest in, it should have a growth rate higher than this. Okay, so personally for me, what is the criteria that I set for myself is the industry should be growing at least 50% more than the pace at which our country is growing. Okay, so if India is growing at a pace of 6% every year, then the industry that I would be investing in, they should be growing at least by 9% every year. And this solar industry is growing at 21%, so it is comfortably above the limit that I set for myself. Okay, so this is one. Second, you need to see if the government policies are favoring the industry or not. So we all know that the government has always been supporting solar industries because uh, obviously because solar is something which is available abundantly, right? There is no dependency on natural resources. We today know like India is so much dependent on natural resources which is coming from outside. Like we are dependent on LPG, on the Middle East countries. We are dependent on Middle East countries for crude oil. So India wants to remove this dependency. So hence government is favoring solar industry a lot. At the same time, whatever electricity is getting generated in India, almost 50% of the electricity is generated through thermal power plants, which require coal. Coal being again a natural resource that is limited in nature. So that's why government wants to move away from coal and it wants to promote solar energy. So this is one more reason why we should be looking at stocks which are into solar industries. Okay, so if you invest in any stock in which the industry is growing fast and the government policies are also supporting, then there is a high chance that you will make good money in those stocks. Okay, so talking more about this, you should be avoiding those stocks which belong to slow growing or those industries where there is no growth and there is a lot of resistance from the government. Like just to give you an example of those industries which are not growing fast or where there is no growth expected. One I can say is say Coal India is one stock wherein the government has no plans to do a lot of investment with more and more thermal power plant, and thermal power plants being one of their major customers. If the number of thermal power plants in India will not increase, then Coal India will not get more business. So this is one stock which you should be ideally avoiding uh, if we follow this approach. Then the second stock which you should be avoiding is the ITC, because like tobacco industry is faces a lot of resistance from the government, because every year government imposes new taxes, and they are not free to do marketing. They are not even free to sell their products to people of any age. There is a certain age limit which has been set. So children less than the age of 18, they cannot go and buy cigarettes. And even the shops which are selling the cigarettes, they cannot be close to temples, they cannot be close to schools. So this industry is highly regulated. So I'm particularly not interested in investing in such industries. Another industry which I don't like, which faces a lot of resistance from the government, is alcohol industry. So even the alcohol industry is highly regulated industry, and it is taxed a lot from the government as well. Uh, there are other industries wherein government favors them a lot, like electric vehicle. This is one sector. Semiconductor. This is another sector where government makes policies which favors these industries. Then another sector which I have to tell you is data centers. So these are some of the sectors. So if you find good stocks from these sectors, there is high chance that you will make good money in the coming years. So I will also skip this slide. You can pause and you can have a look at the slide. Uh, Even this slide I will skip. Okay, so as I already told you, the company is planning to make a capex of 25,000 crores. So in this slide, basically they have told like how they are going to allocate those capex and what they are going to achieve from financial year 26 to financial year 27. So how they are going to deploy that capex and what they are going to use that for. Okay. So this slide talks about what are the new sectors which the company is entering into. The company is entering into battery energy storage system. So this is one promising area where I see growth coming. So what is battery energy storage system? So let us understand this. So we all know that solar panels or solar it generates electricity with the help of sun. Now sun is not available around the clock, right? So say it is available for 10 hours or 12 hours, but during the night time there's no sun. So when there is no sun, there's no generation of electricity. So there is a dependency on other sources of electricity during the night time. So in order to reduce this, uh, so lot of like companies or the governments who are setting up solar plants, they are moving towards hybrid systems. Now, what this hybrid system means is during the day, with the help of solar panels, the electricity will get generated, and whatever extra electricity is being generated, that electricity will be stored in batteries. And during the night time, when there is no sun, there is no generation of electricity, the energy from these batteries are used to power wherever there is requirement of the electricity. Okay. So the second area where they are moving into is the inverters. So the third area where company wants to get into is green hydrogen electrolyzers, and lastly into renewable power infrastructure. So while I was talking about BESS, that is battery energy storage system, India and US are among the fastest growing markets. So this slide talks mostly about that. So let us now move to the financials. Okay, so the total income, the revenue has increased to 6,227 in the quarter two of financial year 26. The EBITDA has reached 1567 crore in quarter two of this financial year. EBITDA margin is up at 25%. Profit after tax in quarter two of FY26, it is at 878 crores. So this is the guidance that the company has given. The company has given a guidance of EBITDA in the range of 5,500 to 6,000 crores. Now this is 2x of what their EBITDA is in financial year of FY25. So this is a really good guidance, almost 100% growth. Okay. So if I talk about the valuation, if you look here, their current stock P is 37.4, and if you calculate their forward P, the forward considering 100% growth, the forward P comes to 27. So you are getting a stock which is a growth engine growing at an upwards of 100%, and you are getting that stock at a P of 27. So this is really good. I feel the valuations are cheap and the stock is investable. Okay, I will come to my final verdict later. Before that, let me also share some additional things. Okay, let me stop sharing the screen. All right. So let us now talk about the management outlook. Okay, so considering the management outlook, the management tone has been very optimistic and confident and growth oriented in both quarter one of this financial year and quarter two of this financial year. The company has been consistently delivering good quarterly results. Talking about the guidance, as I just mentioned, they have a guidance of 5,500 to 6,000 crores of EBITDA, which they have reaffirmed in both the quarters, that is quarter one and quarter two of this financial year. So they have a total capex plans of 25,000 crores and they want to deploy it in the next 2 to 3 years. And most of the deployment will happen in the financial year of 27 and 28. So by financial year 27, so they want to have a target capacity target of 26 gigawatt for modules, 16 gigawatt for cells, 10 gigawatt for ingot and wafers, 20 gigawatt for battery energy storage system, 4 gigawatt for industry for inverters, and 300 megawatt for electrolyzers. All right. So let us now talk about the macroeconomic factors. So recently we have seen there was a GST cut from the government. So the GST on solar components were dropped from 12% to 5%. So this increases the affordability and makes setting up of the solar plants more viable. This is one. Second, Indian government has introduced ALMM policy. It stands for approved list of models and manufacturers. So what it basically means is the entire solar industry, is dominated by China. And what China was basically doing is it was basically dumping these solar components at a very very cheap rate. Okay, so when the supply is so cheap, it becomes very difficult for the domestic industries to manufacture and sell. They were not getting any business. So in order to restrict this from happening, what the Indian government has done is one, it has imposed anti-dumping duty on China. So any solar component that comes from China, there is some additional tax that the buyers will have to pay. Buyers from India who are importing it from China. Okay. So similarly, in order to further reduce imports from China, government has introduced this ALMM policy, wherein government has determined for what models like determined the models and manufacturers. So if I want to set up a solar plant here in India, I will have to uh, procure the parts from these manufacturers only. Otherwise, like firstly, I'm not allowed, and secondly, if I'm taking from China, I will have to pay extra tax in order to get it imported from China. So this way, it becomes less lucrative for anyone who wants to set up a solar plant in India to get the parts from or get the components from China. So that's why initially the share of China in India's solar industry was 90%. So 90% of the parts were imported from China, which has dropped to 50% because of these Indian government policies. So so similar to what Indian government is doing, US government is also doing the same. Like even US government doesn't want the solar components to be coming from China. As a result of which they have also introduced a policy. It is called US IRA and FEOC rules, wherein they do not accept any solar components which are basically coming from China into their country. All right. So there is one risk with stocks like Waaree Energies and similar stocks which are in the manufacturing of solar cells and solar modules. So similar to how Indian government has imposed anti-dumping duty on China, US is also doing a similar investigation on the Indian companies. So they are basically investigating whether the Indian companies who are manufacturing solar cells and solar modules, are they posing any threat to their domestic industries? And if they feel that yes, even these solar panels, solar cells and modules coming from India is a threat to their domestic industry, then even the US government will do the same thing what we have done with China. So they will also impose anti-dumping duty on India for the import of solar products, and that will be a big loss for companies like Waaree Energies. So if you ask me, I am particularly not interested in stocks like Waaree Energies, Vikram Solars, who are into the manufacturing of solar cells and solar modules because of two reasons. One, this entire market is dominated by China, and most of the companies who are operating in this sector, the Indian companies, they are not completely focused on the domestic market. Like like most of their business comes from international market as well. In the case of Waaree Energies, we have seen that 50% of their business comes from India and 50% of their business comes from export, or the international market. And when I talk about international market, US is the biggest market, and we know like who is heading US today. Trump is every day coming and taking some random decisions. So very recently, Trump has also introduced 50% tariff on India. So there are a lot of variables, lot of factors which are affecting these industries. At least when we talk about the export market. So because of this reason, I am not comfortable, because recently China had also put a curb, or they had stopped the export of rare earth minerals or rare earth materials. So the raw materials required for the manufacturing of solar cell is polysilicon, which again comes from China. So tomorrow, if China takes a similar step like what they had done with the case of rare earth materials, then again the companies like Waaree Energies, so Vikram Solar, or any other companies for that matter who are into manufacturing of solar cell and solar modules will get very badly affected by that. So because of these reasons, I am not comfortable investing in this stock. I have not invested, and I will not, also not be investing. There are so many other stocks which are doing well and can be invested. So I would like to skip the stock. So if you want to be part of solar industries, there are other stocks which are investable, like Waaree Renewables Technologies Limited. This is one stock which I feel is investable. I have already made a video on that. This is not a investment recommendation. Please consider this video as for education purpose only. And all the stocks that I have mentioned, I am like, there is no investment recommendation for that. So if you are interested, please do your own research before investing. If you want to learn more about Waaree Renewables Technologies Limited, so please watch my video so that you get a better understanding of how it is different from Waaree Energies. So basically, it is into solar EPC. Solar EPC means it is into the construction of solar plants. So it doesn't matter for them like from where the solar modules or panels are coming through, which country is it coming from, India, is it coming from China. So it doesn't really matter to them. This is one. Second, 100% of their business is domestic. So there is no international exposure. So there is no threat from China, threat from US tariff or something like that. So I feel Waaree Renewable Technologies is more investable because it is a more safer alternative compared to Waaree Energies. Although the stock of Waaree Energy is going up, it is doing exceptionally good, but I would like to skip this stock. So I hope this video was informative and you have gained some helpful insights on the topic. For more such videos, please subscribe to my channel. Uh, uh, so I'll see you in the next video. Until then, thank you. Take care.